Welcome to the Thursday edition of the Tech Stocks Daily Podcast. Buckle up because today's update is packed with thrilling news from the tech giants trading on the NASDAQ. We'll dive into Microsoft's jaw-dropping $3 trillion valuation and its latest AI shakeups, dissect GameStop's surge driven by Roaring Kitty's comeback, and explore how NVIDIA's record-breaking stock performance has catapulted it to a $3 trillion market cap. Plus, we'll reveal why DocuSign is making big waves with solid earnings and smart AI acquisitions. Stay tuned for a lively ride through today's hottest tech stock headlines. Today's buzz is all about Microsoft, and we've got a lot to cover. So buckle up because the Redmond giant is making headlines left, right, and center. First up, Microsoft was valued at a whopping $3 trillion. Yes, you heard that right, a trilly. But here's the kicker. CEO Satya Nadella, who owns roughly 800,000 shares worth a cool $339 million, might not even be the biggest individual shareholder. Enter Brad Smith and Amy Hood. Smith, the vice chair and president, holds 554,587 shares, valued at about $235 million, making him one of the heaviest hitters in Microsoft's shareholder circle. Amy Hood, the CFO, owns 484,692 shares, including deferred compensation. But wait, there's more. Former CEO Steve Ballmer's last reported stake had him sitting on 333 million shares, worth around $140 billion. And though Bill Gates has donated a significant portion of his shares, the Bill and Melinda Gates Foundation Trust still retains a hefty 36 million shares. Switching gears, let's talk AI, because what's 2023 tech news without some AI action? Mustafa Suleyman, Microsoft's AI CEO, has brought his ghostwriter Michael Bhaskar on board for the company's new consumer artificial intelligence org. Yep, Bhaskar co-wrote The Coming Wave with Suleyman, and now he's contributing his writing prowess directly under Suleyman's leadership at Microsoft. The company's internal charts indicate that Suleyman's AI group is supercharged with talent from various backgrounds, including Google's DeepMind AI Lab and Inflection AI. Notably, Karen Simonyan, known for being an AI pioneer, joins Suleyman in leading this innovative team. But hold on to your hats, because the FTC is sniffing around Microsoft's latest moves. Yep, the Federal Trade Commission is investigating Microsoft's $650 million deal with Inflection AI. While Microsoft did not acquire Inflection outright, the FTC is scrutinizing whether the deal was deliberately designed to dodge regulatory oversight. This comes as part of a larger look into AI investments by big tech companies, including both Microsoft and Alphabet Inc. FTC chairperson Lina Khan has vocalized concerns that big corporations could potentially monopolize critical AI technologies, stifling competition and innovation. If Microsoft is found to have sidestepped antitrust laws, they could be facing some hefty fines and a suspension of the transaction. And lastly, for all the investors out there biting their nails about missing the NVIDIA train, fret not. Analysts suggest that Microsoft might just be your next big bet. While NVIDIA shares have skyrocketed 121% in 2024, Microsoft has reported only a modest 10% rise. But with its cloud computing behemoth, Azure, and its growing influence in the AI space, Microsoft's long-term growth is promising. The Azure platform is already making waves in the Fortune 500, and the integration of AI services is giving it a competitive edge over Amazon and Alphabet's Google Cloud. So there you have it, folks. Microsoft is not just making waves. It's creating a tsunami in the tech world with its strategic moves, heavy investments in AI, and some looming regulatory attention. Whether you're a shareholder, a tech enthusiast, or just someone who loves a good corporate drama, there's plenty to keep your eyes on when it comes to Microsoft. Stay tuned and keep those notifications on, because we'll bring you the next update before you can say Satya Nadella. Today, GameStop absolutely stole the spotlight. If you're thinking, wait, didn't GameStop already have its moment in the meme stock sun? Well, hang on to your gaming chairs because the saga continues. The man, the myth, the legend, Keith Gill, better known to the internet as Roaring Kitty, has reemerged, and he's shaking things up like a pro gamer entering a noob server. First off, Roaring Kitty announced he will be hosting his first YouTube live stream in nearly 3 years, and it's scheduled for tomorrow at noon ET. This announcement alone was enough to send GameStop shares skyrocketing. Seriously, the stock surged over 20% just on the buzz. Can you imagine the power of a YouTube live stream doing that? Move over influencers, there's a new sheriff in town. Now you might be wondering, what's the big deal about this guy? Why does Keith Gill, who goes by Deepfing Value on Reddit, have such a gravitational pull in the stock market? Gill was one of the central figures in the 2021 GameStop short squeeze, dubbed by many as a David versus Goliath battle between retail investors and Wall Street hedge funds. Back then, his deep analysis and bullish stance on GameStop's undervalued stock rallied a horde of retail investors to his cause, causing a massive short squeeze and sending share prices to the moon. But let's dive into some juicy details. Reports indicate that Keith Gill isn't just talking the talk, he's walking the walk with a whopping 5 million shares of GameStop and an additional 120,000 call options. At current market values, his portfolio is worth over $100 million. If you think that's impressive, consider this. Should he exercise those call options, his stake could balloon to 17 million shares. If the stock hits its recent high of $64, his holdings could top a staggering $1 billion. Not bad for a guy who started with a relatively modest investment just a few years ago. However, it hasn't been all smooth sailing for our meme stock hero. Gil faces scrutiny from financial regulators and trading platforms who are digging into his recent market activities. Indeed, Massachusetts' financial regulator is looking into him, and E-Trade is reportedly considering giving him the boot due to concerns about potential market manipulation. Drama much? Now, why should you care? First, because GameStop shares aren't just spiking, they're doing backflips. Second, the implications of Gil's return and the potential regulatory spotlight could have repercussions far and wide, rippling through meme stocks and potentially affecting trading platforms and policies. So, what's next? Everyone's eagerly awaiting Roaring Kitty's live stream tomorrow. Will he reveal his next move? Sell his shares? Buy more? His fan base on Reddit and social media are all agog, and the markets are equally jittery. One thing's for sure, with Roaring Kitty back in the game, GameStop's story is far from over. Get your popcorn ready. This is one live stream you won't want to miss. Hold on to your GPUs, folks, because NVIDIA is all anyone can talk about today. So, what's the buzz all about? Well, NVIDIA stock has been skyrocketing to new heights, turning heads on Wall Street and making headlines worldwide. First off, NVIDIA stock surged to record highs, propelling the company's market capitalization over $3 trillion. Yes, that's trillion with a T. This astronomical growth has nudged NVIDIA past Apple, making it the second most valuable company globally, just after Microsoft. The surge was so powerful that it added nearly $150 billion to NVIDIA's market cap in just a single day, more than the entire value of AT&T, a company that's been around since the time when people thought cell phones should flip open. One of the key drivers behind this epic rise is the booming demand for AI processors. Big names like Microsoft, Meta, and Google are lining up to snag NVIDIA's next-gen chips to power their futuristic AI models. With generative AI expected to grow into a nearly $1 trillion market by 2032, NVIDIA is at the heart of this digital gold rush, and investors are understandably excited. But wait, there's more. NVIDIA isn't just resting on its silicon laurels. They've announced a 10-for-1 stock split set for June 7th. While stock splits are usually a reason to get the confetti out, investors are more jazzed about the company's ongoing innovations and strategic moves. NVIDIA's next-gen H200 GPUs promise not only more computational bang for the buck, but also substantial energy savings, something data centers drool over. Moreover, NVIDIA is flexing its muscles in the global supply chain game. With high-bandwidth memory chips from Samsung and potential future collaborations with Intel, the company's securing its dominance in the AI hardware market. Not to mention, NVIDIA recently announced plans to build a second supercomputer in Taiwan, cementing its strategic ties with critical suppliers like Taiwan Semiconductor Manufacturing Co. These moves underscore NVIDIA's aggressive expansion strategy to meet the soaring demand for AI solutions. Financially, NVIDIA is a fortress. The company boasts hefty cash reserves, cushioning it against market swings and allowing for further growth and innovation. As of April 2024, their cash and cash equivalents topped $31 billion, up from $25.98 billion earlier in the year. When it comes to revenue, NVIDIA's performance is nothing short of jaw-dropping. They posted a 262% year-over-year revenue growth for Q1 of fiscal 2025. Management's Q2 revenue target of $28 billion further solidifies their upward trajectory. And let's not overlook market sentiment. Industry experts and analysts alike are bullish on NVIDIA's prospects. From Jake Dollarhide at Longbow Asset Management, praising the company's current earnings from AI, to Dan Niles of Niles Investment Management, predicting even more growth, the consensus is clear. NVIDIA is the stock to watch. So there you have it. NVIDIA's headlining surge is a cocktail of record-breaking stock performance, strategic future-proofing, and unparalleled market dominance in the AI space. And trust me, this story is far from over. So keep an eye on those stock tickers and GPU updates, because NVIDIA isn't just playing the game, they're redefining it. All right, tech enthusiasts, let's wrap up the latest buzz around DocuSign. Today, DocuSign was in the limelight for multiple exciting reasons that you won't want to miss. First up, the financials. DocuSign nailed it with their Q1 earnings report, released after the bell on Thursday. They saw a 7% year-over-year revenue increase, hitting $709.6 million and beating analyst estimates. They didn't stop there. Adjusted earnings per share came in at 82 cents, also surpassing expectations. Way to go, DocuSign, for kicking off fiscal 2025 with a bang. But numbers aren't the only thing that had folks talking. The company made waves with a whopping $1 billion increase to their stock repurchase program. That's a strong move, signaling confidence in their future growth. Speaking of which, DocuSign's CEO Alan Thygesen emphasized the company's solid start and its strategic expansion with the launch of the Intelligent Agreement Management platform. And here's a bonus bit. They wrapped up Q1 with $1.2 billion in cash and equivalents. Cha-ching. On the forecast front, DocuSign expects to keep the momentum going. They projected Q2 revenue between $725 million to $729 million and targeted their fiscal year 2025 revenue to hover around $2.92 billion, all numbers that hit their mark. Investors, take note. Not to be missed is their fresh acquisition of Lexion, an AI-powered agreement management company. This move, completed on May 31st, is a clear signal that DocuSign is doubling down on integrating AI to streamline and enhance their services. It's an exciting development for those of us keen on seeing how AI will shape the future of digital agreements. DocuSign also has some major love from analysts, according to multiple Benzinga reports. Most prognosticators adjusted their predictions favorably just ahead of the earnings announcement. The company's strong Zacks ratings back this up, noting the promising avenues for growth investors. Despite these wins, DocuSign's shares saw a dip in after-hours trading, down 3.62% to $52.67. Market movements can be unpredictable, but with the solid numbers and strategic moves, it'll be interesting to see how this plays out in the long run. Okay, Tech Fam, we've covered the essentials, from robust earnings to strategic moves like acquisitions and stock repurchasing. Now I'm turning the mic over to you. What do you think of DocuSign's latest moves? Excited about the AI integration or the revenue projections? Concerned about the share price dip? Drop your thoughts in the comments below. I can't wait to hear your views. Keep those comments rolling, and let's dive into the conversation. All right, Tech Fam, let's put our stock goggles on and dive into the world of NVIDIA, ticker symbol NVDA. The buzz is big, the numbers are bigger, and the AI future seems luminous. The question on everyone's mind, should you sell, buy, or hold NVIDIA stock right now? First off, NVIDIA's stock has skyrocketed to new heights, pushing the company's market cap beyond $3 trillion. They've leapfrogged Apple to become the second most valuable company in the world. This meteoric rise is driven by surging demand for their AI processors. With giants like Microsoft, Meta, and Google lining up for their next-gen chips, NVIDIA is poised to dominate in the AI space. They've announced a 10-for-1 stock split, making it more accessible to retail investors. Plus, they're out there making strategic moves, like building a second supercomputer in Taiwan and partnering with high-bandwidth memory suppliers like Samsung. Financially, they're sitting pretty with $31 billion in cash reserves and an astonishing 262% year-over-year revenue growth for Q1 of fiscal 2025. So, what's my take? If I were in your shoes, I'd buy. Here's why. Strong position in AI. NVIDIA isn't just participating in the AI boom, they're leading it. With the anticipated growth of the AI market to nearly $1 trillion by 2032, NVIDIA stands to gain massively. Strategic moves. Their collaborations, stock split, and new supercomputers show aggressive expansion and future-proofing. Financial health. Robust cash reserves and record revenue growth provide a solid buffer and momentum for further development. Remember, while NVIDIA's current valuation might seem high, the future growth prospects make it an attractive buy for long-term investors. But don't just take my word for it. Always do your own research and consider your investment horizon and risk tolerance. What do you think? Ready to ride the AI wave with NVIDIA? Let me know in the comments, and happy investing. Wow, what a roller coaster of a day on the NASDAQ. From Microsoft's eye-popping $3 trillion valuation and intriguing AI ventures, to GameStop's meme stock resurgence thanks to Roaring Kitty, and NVIDIA's jaw-dropping surge past $3 trillion in market cap, the tech world is absolutely buzzing. And let's not forget DocuSign, making strategic moves with solid earnings and AI integration. If you enjoyed today's update, don't forget to like, subscribe, and share this video with your fellow tech enthusiasts. And be sure to come back tomorrow for another round of exciting tech news updates.